Hi guys, welcome back to our channel. If you are new here, my name is Menelik and I'm a forex trader, and I also trade S&P indices, etc. In this video I want to show you guys a 20 pips a day strategies that you can use a couple of times in a week. They happen a couple of times in a week, so it can help you out if you are looking for a trade strategy or something to backtest in the market. I remember when I started trading, it wasn't easy to find the good stuff, the stuff that work on a regular basis. The people that got me into trading, etc., they were retail trader. They weren't using smart money concept, which most of the stuff that they did was, resistance, support, breaking resistance, etc. Usually when they show the stuff in the chart, you look at it, it kind of makes sense, but then you go in live market, you always get caught up. And sometimes you see the break happen, you put in the trade, and then still goes against your stops, and you are like, okay, this thing is not working, etc. So in this case, those are things that I've learned and that I've been applying to my own trading, and it has been working. And I want to share it to you guys if you guys are struggling looking for strategies that is repeatable, that is easy to structure or to see in the market, and then once you see it, you can take your trade. And then before you do that, before you do anything, you should go and backtest the strategy before anything else. And then if you see it repeat a lot of time, if you can identify it when you are trading live or in your demo, then you can go and take your trade, etc. So this is E-mini S&P 500. And we're looking at daily time frame. The strategies that I'm going to show you is mainly executable on 15 minutes to 5 minute time frame, and you have to execute them at a specific time because market move based on time and price. So markets, their volatility, their liquidity move at a specific time in the market. It doesn't happen all the time or every hour, etc. So you have to be in the market at a certain time in order to capture those moves. In this case, it's going to be New York kill zone, which is between 8:30 in the morning all the way to 3 p.m. in the afternoon. This strategy is based on ICT entry technique, which is on his ICT 2022 mentorship. So if you want to learn more about it, you can go on his YouTube channel. I will put it in the comment. You can go on his YouTube channel and then follow the mentorship. You go through the learning process and then master it yourself. But here is just a quick glimpse of what has been happening, and the reason I'm showing it to you guys is because I've been using it and it has been working. So without any further ado, let's jump into the strategy. So here we're on daily time frame E-mini 500. We have had a run on sell-side liquidity at the beginning of October, and then we have had a structure shift in market here. When market moved, it created this imbalance so at this point here in market, I am already bullish because of the imbalance created here. I know that price will jump back into it, and then it's gonna come back either to take out this buy side liquidity because it's imminent. We do have one buy side liquidity here. We have a failure swing, which is a relative equal high, and usually price goes for those levels. So at that instant, when price dropped back into this level, I was already bullish. So I have my daily bias, which allows me to go in the market to look for trade based on bullish bias. So we are going to go to November 17, 2022, and then we will look for those setup based on bullish and at those specific time. So we'll go down to 15 minutes on the 17th of November, and then we'll look for bullish bias trade. And then the setup will be based on the strategies that I'm going to provide you guys in this video. You backtest it a couple of times, see how it works. If you want to apply it or not, that's up to you. On the 17th, we had price run up back into this level, which we know that on the daily time frame, this is a fair value gap, or again, or called imbalance. And so we are looking for short-term high and short-term lows of the day. So by delineating the day, we can find the high and lows of the day and the previous day, and we will frame our trade based on that. So the previous day, before it ran back into this fair value gap, at which where price goes back to, we are bullish. So these are relative equal lows, so we are expecting price to run them, right? And then the setup that we're looking for is after 8:30. So what it says is like after 8:30 in market, you look to see if price run previous highs or lows, which it did here. And then what you're looking for in price is for it to show a market structure shift. The market structure shift happened by having a fair swing high and a fair swing high to the left and the right of it, and then it shift in structure. And then once it shift in structure, it created an imbalance, an energetic move in market. So I don't know if you guys seen my trades, but you always see those stuff that I put there, like the rectangle. Those are the fair value gaps, the imbalance. So when you guys are going into your short, this is what you need to look at. Imbalance right here. When you find your imbalance after 8:30 and you look before 8:30 to see if any lows or highs has been taken. Your target, it says, is buy side liquidity, which is equal high all the way up here, or you always aim for the low hanging fruit, which is gonna be this level here. So put your Fibonacci in. This is the second technique, which is based on Fibonacci retracement, which is called an optimal trade entry pattern. That's also based on ICT entries. So whenever you have the correct Fib retracement, you will, put it from the low to the high, and then the retracement in the 60% Fibonacci, that's where your entry is going to be at. And then your target is a low hanging fruit, which is a buy stop above here. Those are called buy stops because they have equal high, and we do have liquidity residing at that level. And we know that after 8:30, taking lows, there will be energetic move in price based on news that's happening. And then if you enter the right trade, you may actually make it. So your entry on this trade will be based on this move back here. So I'm gonna use the replay button to show you guys how that execution would have been. So if you are looking at the market back on 8:30, you will see this move happening. And then you see the failure swing up here. You still look, you wait and see what price does. You created the energetic move, so you map it up. This is your actual imbalance. You could have framed your trade at this level with an entry here, you sell stock below this level, and your target is right above these equal highs. And then what you're just going to look for is wait. All you gotta do is just wait. Scare you out, just wait, and then tap you out. And if you want to hold for long term, probably the target is gonna be there. If it's your target for the day, how many pips is that? In terms of S&P 500, they count points, so it will be about 40 points. Yeah, 47. Yeah, about 40 points in S&P. So this is what it looks like. And let me take this off so that we can go back. So so that's like one of the trades that you could have taken off. And then remember the target second here. If you hold that trade for a couple more days, you will have aim for this target, and then finally aim for that one. The second entry will be here 8:30. We already know our bias based on daily time frame, which means that we are bullish and we are looking for buy profile. So whenever price offer us those buy profile, we take them. So in this case, we have this short-term low, and for this day, we have a short-term high on that level, and we wait. We see what price offers. Here we have failure swing right here. So wait to see what price does above it. So here, breaking market structure, which is called market structure shift. We wait to see what price does. Is it energetic? Yes, it's an energetic move. Do you have a fair value gap? Yes, right here. Where will our entry be at? We will enter here in this candle, and our exit will be below this candle. Trade setup will be like this. From this to this low, and you wait. If you aim for your low hanging fruit of the day, that will be this, about 1.5 ratio. However, if you hold because you trust your daily bias, you will be above this level, which will give you a 3.6 ratio trade. Entry, trade, and then it moves. So you may have one entry here, wait for the second day, doesn't offer anything really, and then it just continues, because this is a continuation. There's another technique that you can use in this case based on those lows. I think I put it in my first videos. In the first video that I made, I put it. This is considered as an intermediate term low, and then because it went back into an imbalance right here, and then we do have a long-term low here. Because of that, we do have a short-term low on the left and short-term low on the right. And then what happened is that we anticipate this failure of price. If you guys have seen most of my trade, you will see like the little demarcation that I make, and it's based off those things. So we anticipate the failure of this swing low, and then once price does this, what we do is we consider the last candle as an order block, and then our entry will be based on that, which is kind of like, this is a sniper entry technique, and I like that one better. In terms of confirmation of my own personal trade, that's what is usually most based off. On those trades, that's exactly what happened. You will see entry based on sniper entry, and then you just exit over there. The same technique that I used there is what I use to determine my entry from yesterday, and that's basically the same thing. After a run on sell liquidity, we have a failure swing. We trade right above it, created an imbalance, price trade back into it, creating an intermediate term low with 2 intermediate short-term low on the right of it. This become my bullish order block, and my entry is based on this. My target was this level. It didn't touch it fully yesterday, but it did touch it today at this point, just by a peep, and then over time touch, get out. So yeah, that's the video for today. If you guys if you got more questions, leave in the comments. I'll try to get to them as I can. And until next time, safe trading and peace.